Hi traders, it's Alberto, and this is the follow-up on the Pro Traders Workshop video that I sent out in the past 2 days. I've been getting a lot of emails, a lot of confusion on how to properly enter trades based on the crossover on MACD, the 21 moving average line, the price action, and parabolic. And it's what you need to do, and you need to realize that unless you have two time frames that are identical, that mirror each other, it's going to be very difficult to take this trade. And I'll give you a good example. Let me just remove the pivot points. Now, notice the rally on Monday. Friday, the market sold off, and then Monday was a retracement. Notice the two lines in MACD. They're going up, okay, on a 1 hour chart. But if you look on a 4 hour chart, the two lines are angled and separated going down. So we don't have a confluence of indicators. We don't have MACD on the 1 hour and 4 hour chart identical. They're going in the opposite direction. It wasn't until Tuesday, today, that we had confluence. We had the two lines on MACD crossing to the downside, and the 4 hour MACD was also. So we had a confluence of indicators, and both time frames essentially looked identical, and that's where you're going to find the best trade setups. And this trade went down over 112 pips. Okay, just again, I'll say this again, if you have confluence between the 1 hour and 4 hour chart, and in this case we have the two lines of MACD cross to the downside on the 4 hour and the 1 hour, you're going to have a good trade setup. You're going to make money on that trade. It's when you have two time frames that are not mirroring each other. And this area that I talked about here, the two lines of MACD across to the downside on the 4 hour chart, but on the 1 hour chart, they're going up. So you can't take a trade on this pair. I mean, we took this trade based on Monday retracement because that's what we do. If the market sold off on a Friday, we look for retracements on Monday. Okay, hope that's clear. If you have any questions, you could always email me, but it's always doing your top-down analysis that I go over in the Pro Traders Workshop. We spend hours and hours each week identifying directional bias using several time frames. And this is just a preview of that, of the Pro Traders Workshop series. It's just being able to identify directional bias by looking at every time frame. If you have the daily and the 4 hour and 1 hour chart lining up, then you're going to have a trade that will last more than a day. Okay, and so that was today's trades on New Zealand yen. The other one was Euro New Zealand dollar. Again, the same thing. Let me just pop up the pivot point coming into a new trading day, the European session. Two lines of MACD crossing below the central pivot point, crossing below the 1 hour, the 21 moving average line. Two lines MACD also cross at the downside. So even if you took this trade at the open of the New York session, which is around here, you still would have made, at least 50 pips on this trade. Went down 108 and 6 pips from the New York session. From the Asian session, it put in 181 pips. Okay, so the yen crosses are in a strong downtrend, which means the yen is going up against the euro against the pound, against the New Zealand dollar, also against Aussie dollar. Let's pull up the Aussie dollar, Aussie yen. Again, there it is. There's the two lines of MACD crossing to the downside on the 1 hour chart. Price breaks below the 21 moving average line, below the central pivot point. And within this 24-hour period, that was the direction of the market. Look at your 4 hour chart and notice that the two line of MACD also crossed to the downside. So we had confluence of indicators, 1 hour and 4 hour chart, essentially mirrored each other. Okay, so make this bigger, so that makes no sense looking at this chart with all these pivot points. But if you notice here, this is the trade that was taken during the Asian session. Price broke below the central pivot point, and the 1 hour and the 4 hour chart basically look the same. They're both going in the same direction. You don't have MACD on the 1 hour chart going up and MACD on the 4 hour chart going down. They're both going down. And this is so important because this is what you need to look for, recognize, to be able to make a trade that is going to be profitable. It's going to be a high probability trade setup. Okay. Canadian yen. There it is again. This was Monday's retracement. The market had been in a downtrend, and Monday retraced, and then coming into Tuesday. Here's Tuesday right here. The market broke below. Let's pull up the central pivot point. Price broke below the central pivot point. I was looking at this early, around 7 o'clock, 8 o'clock in the morning, and price had turned around and headed south, and the two lines of MACD had crossed to the downside, but it wasn't closing below the central pivot point. So what I just waited for that to happen. As soon as it broke, I just did not hesitate. I didn't even wait for this candle to close. It did close on the 30-minute chart, but on the 1 hour it had not. So I just took the trade and managed to capture 30 pips on this pair. So it's just a judgment call. Are you going to take the trade below the 21 moving average line when the two lines of MACD cross to the downside, but it hasn't crossed the central pivot point? Well, I would look at the 4 hour chart to see if the lines have crossed to the downside, and it had right there though. So let's look at the 1 hour chart, see with the 4 hour chart. So the 4 hour chart, the two lines of MACD had crossed around here. This is the reference point, so around this candle. So this is where I most likely would have taken this trade, because the 1 hour and 4 hour chart at this point in time were mirroring each other. Okay, I hope that makes sense. If you haven't, please email me if this makes absolutely no sense to you, because I'm trying to make it this as simple as possible. Forex should not be complicated. It's just you should have very simple rules, very simple strategy. It should be visual. You should be able to count on these indicators, because these indicators are there to make you money. They're designed there to help you take a trade. But if you don't understand them, they're not going to help you at all. They're going to be a hindrance. So again, the two lines of MACD, if you're selling, need to cross to the downside, and price needs to be below the 21 moving average line, and you need these parabolic bars on top of price. If you're buying, the two lines of MACD must be crossed to the upside, and price needs to be closing above the 21 moving average line, and the bars need to be on the bottom. Okay, I can't emphasize this enough. I can go over this 1,000 times, and some people will probably still not know what I'm talking about, because they can't understand that something could be so simple. And it's extremely simple, but you must apply the rules. You must look at a 1 hour chart, you must look at the 4 hour chart, then scroll down to your 30-minute chart to enter a trade. So on the 30-minute chart on this pair, I would have entered it, and let me pull up the pivot point. So right there, when this green candle closed below, that would have been my entry, because I know at that point in time the two lines in MACD crossed on the 4 hour chart. Okay, and on this trade on the 30-minute chart, as soon as a body of the candle closed above the central pivot point, I know that the two lines of MACD already have crossed to the upside. Then this is an easy trade to take. Everything is telling me that we're going north. Parabolic bars on the bottom, price is above the 21 moving average line, price is above the central pivot point, and the two lines on MACD are crossing up, and angle and separated going up. Okay, that's it for this tutorial. If you have any questions, again, just go to the website that's on the page here and either subscribe to our Pro Traders Workshop, Trade Signals. We also offer automated indicator, it has buy and sell signals. Thanks for watching the video. Talk to you guys.